Hello and welcome. You're watching the Daily News Simplified, and as the name suggests, here we try to simplify important news article from the perspective of both prelims as well as mains examination. So today being 8th of June, we have in our discussion 6 important articles which we'll be discussing in the period of next 1 hour or so. So without further delay, let us first start with the article. But before moving forward, please make sure to hit the like button as well as subscribe to our YouTube channel for more current affairs content. So let us start with the first article, which you can see appeared in the Indian Express newspaper. Now RBI recently completed 100 years of its existence. So in this regard, few days back, RBI came up with a report which was called as Aspirational Goals for RBI at 100, and this report it presents a multi-year time frame to implement liberalizing of capital account of India's balance of payments, attempting to globalize Indian rupee as well as further India's digital payment infrastructure. Now today's article, that is the comprehensive mains discussion, it will involve discussing the pros and cons of capital account convertibility. And why are we discussing this topic? It is because in GS paper 3 syllabus you can see this specifically written effects of liberalization on the economy, and after being liberalized, India has seen more foreign currency transactions both inside India and from India to other nations as well. Additionally, you can see there was this question in the mains of the year 2013 where a question appeared on why is there a need to increase India's foreign direct investment. So this topic becomes important from mains perspective. So in this regard, let us discuss what is convertibility of Indian rupee. Now, for example, you can understand Indian currency can be converted freely with, for example, a foreign currency like US dollar or any other currency. Now, why you need conversion of domestic currency into foreign currency? Quite naturally, you need to purchase something from outside India. That's why you need foreign currency. So there are two types of transaction which can be done in order to purchase a foreign currency or asset, and these are divided into two separate categories. First is current account transaction and another one is capital account transaction. Now, whenever you need to buy goods and services from outside the country, or you need to send remittances, or in order to travel, you need foreign currency. So the transactions made under these categories, they are termed as transactions under the country's current account. Whereas if you want to buy assets such as property or invest into another companies, these are termed as capital account transactions. Understood? So as far as current account transactions are concerned, India from the year 1993 has permitted full conversion of Indian rupee into other currencies, and these are termed as full current account convertibility. Now, whereas conversion of capital account is concerned, India currently allows only partial capital account convertibility because naturally there are many sectors in India such as socially sensitive sectors such as gambling or money investing, or strategic sectors like atomic energy. These are protected by the government, hence foreign investment in these sectors are not permitted. Thereby you can understand India currently only has partial convertibility of its current account. Now many advanced economies such as India, US, they do not have a full capital capital account convertibility as of now because it is not desirable. However, for any economy to become advanced, it is desired that a economy moves towards full capital account convertibility, which means liberalizing transactions into its capital account, such as promoting more investments into that country, into its various assets such as property or companies, etc. So this is what you can call the question related to capital account convertibility. Now, as the Indian economy has become advanced over a period of few decades, the Indian government has tried to promote more and more capital account convertibility through various steps. So let us understand what are the steps that have been taken by government in order to make Indian economy a fully convertible from this capital account perspective. Now, to promote investment in government securities by non-residents, the government recently made fully accessible route which permits investment in government securities without any limit. So this was liberalizing of fully access route is concerned, which promoted investments in government securities, and it enabled the government to secure finances from outside India as well. Further, as far as sending money out of the country is concerned, in this regard, government liberalized its remittance scheme, which was termed as a liberalized remittance scheme. Now, under this scheme, per year, an Indian resident can send as much as $250,000 outside the country for both current as well as capital account transactions. Now, this is done per person per year basis. Further, as far as securing finances or loans from outside India is concerned, it is termed as external commercial borrowings, and most Indian corporates currently they gain loans from outside the country using this route. So, in order to promote foreign loans, the government of India has rationalized the norms related to external commercial borrowings. First of all, there were sectoral limits, and these limits were removed, and as much as 750 million of funding per year can be gained by a company in a sector which is permitted to have foreign direct investment. Further, these loans have no end use restrictions, which further has liberalized the external commercial borrowing sector. Now, also recently you must have followed many news that government is opening various sectors to make it eligible for foreign direct investment. And this signifies the liberalization of foreign direct investment norms, as most of the Indian sectors currently, barring some sensitive sectors like atomic energy and gambling, they have been opened up for foreign direct investment. So naturally, these sectors will witness more foreign investment, which will promote the development of these sectors, leading to development of Indian economy as well. So these were the steps that have been taken recently by the government in order to make India more towards capital account convertibility. So let us understand what are the benefits of capital account convertibility as to why many advanced economies are looking forward to make their economies more capital account convertible. Now, first of all, right at the outset, I will like to highlight that capital account convertibility promotes economic growth in an economy, because as investments increase in an economy, it will promote development of various sectors, thereby increasing any country's GDP as well. Further, as domestic development increases, it will lead to various multiplier effects around the economy, because for to gain more investment, any government will try to make infrastructure levels across the economy better, such as construction of roadways, railways, special economic zones, as these infrastructure development encourages more and more foreign direct investment. Further, as Indian economy as a whole undertakes significant economic growth, these industries will also enable creation of employment in various sectors. As you can witness, India's automobile sector has presence of many companies from say Japan, South Korea, as well as European companies. And when these companies they invest in India, they establish factories for production, which has created more and more employment across the sector, in addition to leading to increased exports to other countries. So these are the benefits that it first of all promotes greater economic growth, which has multiplier effect, such as creation of infrastructure as well as creation of more and more employment for domestic citizens. Now also, promotion of capital account convertibility, it also makes any country's financial sector more efficient in this regard. Because for capital account convertibility or for attracting capital investments for abroad, for example, a corporate will try to make their balance sheets more healthier, as it will increase competition between various companies to get foreign investment. Thereby, these companies will make sure that they have good corporate governance, which leads to healthier balance sheets, thereby enabling them to attract more and more foreign investment. Whereas, as far as government is concerned, it will try to make its macroeconomic conditions more healthier, that it will try to reduce the debt levels in an economy, reduce inflation numbers, as these numbers are very much taken into account by foreign investors in order to get maximum return of their investments. So, to promote foreign investments, a country's financial sector becomes more and more efficient. As companies have good governance as well as government, they become fiscally more responsible in that regard. Further, let us understand what impact does full convertible capital account has on its country's financial market as well. As you can understand, with increased investment in India's financial markets such as stock markets, we have witnessed increased participation of both institutional as well as retail investors in general. So, this has in a way increased liquidity in the market, thereby enabling greater participation for all the sections of investors. So, you can see as greater participation and liquidity in financial market, it has enabled Indian citizens as well as citizens from across the world to gain maximum out of India's financial market, thereby enabling them to become one of the bulls of Indian market. Like this honest individual. Further, as any country tries to make its capital account more fully convertible, it also increases the avenue of country's citizens to diversify their investment across various goods and services across the world. So, by diversifying the investment, it reduces the risk levels of any economy, and it further increases the disposable income of citizens of any country. So, with this increased disposable income and reduced risk, as you can understand, it has a multiplier effect across the economy, as these resources will then be channeled into economy, which will lead to greater investment, greater employment, and greater tax returns in general. So, these are the benefits that we can get if we want to make our capital account more and more or fully convertible in that regard. However, this capital account convertibility, when made fully convertible, also comes with various set of challenges. So, in this regard, let us take a look at what kind of challenges does any economy face whenever it is made fully convertible in its capital account. Now, first of all, any economy, it will want to have a stable exchange rate, which means for every rupee, we want to have a certain amount of dollars that requires us our foreign currency rates to be stable. Now, this stable exchange rate, it helps any economy to gauge the cost of its import and also estimate what kind of exports will it be doing in next financial year. Hence, exchange rate stability is very important as far as economic health of any country is concerned. However, with greater inflow of investment as well as greater outflow of investment, we witness that this exchange rate, it becomes volatile in this regard. So this volatility, it negatively impacts any economy in general because of increased inflow and outflow of foreign investment. Further, as you can understand, with fully convertible capital account, more and more loans by corporates have been sourced from outside the country as well. So you mean these loans, they in general are sourced in foreign currency such as that of US dollar. So any company for that matter, if they were to take loans from outside India, then naturally they will have to pay loans in that particular currency itself. So this requires them to convert their local currency into foreign currencies. However, whenever the exchange rate becomes volatile, it negatively impacts the ability of any company to return these loans, as their interest payment on these loans becomes more and more high because of volatile foreign exchange situation. Hence, this can create unstable foreign debts as far as Indian corporates are concerned, thereby making them more perceptible to foreign interference. Further, increased investment in India's local economy, it also has a chance of creating credit and asset bubbles. Because more investment in equity markets, it has a potential that the valuations of Indian stock market will grow further and further, thereby making it expensive for future investments as well. Further, investment in, say, sectors such as property has the potential to make property prices and more higher, thereby making them inaccessible for Indian domestic investors. Hence, this is what you can call a credit and asset bubble, as the value of assets in domestic market due to foreign investment, it grows bigger and bigger. Now, whenever an economy fails, these bubbles they burst, leading to various negatively impacting any economy in general. Further, promoting foreign investment, it also exposes any economy to global macroeconomic shocks. And this was very much prominent in the 1997 East Asian financial crisis. Now, these financial crises they took place in East Asian countries, and these countries they had full convertible capital account transactions. Further, during the 2008 subprime crisis in US, we witnessed increased outflow of foreign investment from emerging markets like India, thereby highlighting that Indian markets are now exposed to global macroeconomic shocks. Further, as I've already highlighted, it is very much essential for an economy to have a stable exchange rate. As by having a stable exchange rate, any economy wants to become more and more export competitive. However, whenever we witness increased amount of inflow of foreign investment, this can create appreciation in the value of Indian rupee. And as you can understand, whenever Indian rupee its value appreciates, India's export competitiveness it reduces, because our products they become more expensive in export markets in general. Hence, more expensive Indian products will discourage buyers from buying Indian products in general, thereby negatively impacting our export competitiveness. Further, there's this term in economics which is quite frequently used, which is called as a Triffin dilemma. Now, this Triffin dilemma highlights that there are three pillars in an economy, which is called as a capital account convertibility, stable exchange rate, as well as independent monetary policy. Now, this Triffin dilemma highlights that any economy in general can have only two of these factors simultaneously at once, whereby ignoring the third factor in general. So, for example, whenever Indian economy is trying to make its capital account fully convertible, as well as want to make its exchange rate stable, then Indian economy will have to let go of its independent monetary policy. Now, as monetary policy is very much essential for maintaining stable inflation rate in country. So, whenever India want to take a fully capital convertible account as well as maintain a healthy stable exchange rate, it will mean that India's monetary policy will witness various shocks from outside India, because increased investment will increase money supply in India, and whenever India will want to control this foreign investment, it will lead to significant risk as far as monetary policy is concerned, because India will not be able to gauge and control the exact level of money supply in the country. So this in a way jeopardizes our attempt to have a stable and independent monetary policy. So these were the challenges that are concerned with capital account convertibility. So in this regard, let us consider what should be the ideal way forward for any economy like India in order to make it more and more capital account convertible. Now in this regard, government has constituted what you can call a Tarapur committee, and this committee it reviewed India's capital account convertibility policies, and it suggested ways and means in order how to make capital account convertible more and more resilient in nature. Now, this committee it highlighted that making capital account fully convertible, it is not an event, that you cannot certainly make your capital account convertible on an overnight basis. Rather, this committee it highlighted that there should be a gradual and phased approach towards attempting a fuller capital account convertibility. And this phased approach of capital account convertibility, it also requires other reforms that should be undertaken on a macroeconomic basis. Now, first of all, this committee suggested that the government should aim to limit the amount of borrowings it makes every year, which means the government it should limit the amount of fiscal deficit it incurs every year, which will make India's macroeconomic condition more and more stable, as healthier government balance sheet will control the levels of inflation in an economy, thereby promoting more and more foreign investment. Further, this committee also highlighted that government should do away or try to reduce its revenue deficit. And how it should reduce its revenue deficit? By increasing the collection of its revenue, as then these revenue surplus can then be utilized for payment of government foreign debts. And these two conditions will make India's macroeconomic conditions as far as government is concerned more and more stable. And any stable economy can witness increased amount of foreign investment. Further, to promote and make India's debt payment in terms of foreign currency more resilient, this committee highlighted that there should be an adequate level of forex reserves in India. And as you can see, India's forex reserve in last 2 decades has only increased leaps and bounds. As today's news article, which we'll cover later on, it highlights that India's foreign exchange reserves, it has surpassed the figure of $650 billion. So you can understand maintaining adequate level of forex reserves will enable any economy to have or to pay its foreign debt obligations in a constructive manner. Additionally, this committee, that was Tarapur committee, it also highlighted that there should be an efficient regulation of financial sector in general. That means that public sector banks should undertake reforms in order to reduce their non-performing asset levels, as it will promote then foreign investment in many sectors. Further, this committee also highlighted that there is a need to encourage private sector participation in countries' banking sector in order to make them more efficient and perceptible to foreign investment. So these were the points that the Tarapur committee suggested. As more importantly, it highlighted that the capital account convertibility is a gradual approach, that you slowly increase the levels of foreign investment which is permitted in the Indian economy, and this can be supported by various reforms such as governmental balance sheet, and it should be made more resilient, promotion of private sector in banking sector, as well as maintaining a healthy level of foreign direct in forex currency reserve. So this was all for first article discussion, and with this we move to the second article of the day, which you can see appeared in the Indian Express as well as in the Hindu as well as the Business Line newspaper. Now this article highlight that NOTA, that is none of the above option, which is there in our country's electronic voting machine, it has played a significant role in recent times. Now in absolute numbers, in this election, NOTA vote, it constituted about 63.7 lakh votes in total. However, in terms of percentage of votes, it has somewhat reduced in the last 5 years. As in the last general election, that was in 2019, NOTA, it constituted about 1.06% of total number of votes polled. However, in this election, it has reduced to about the levels of 1%. However, as nationally the amount of NOTA votes in terms of percentage, it has reduced. However, in regions like Northeast, these NOTA votes have increased. However, what is more important in this regard is that in 19 out of 543 seats, the margin between the first and the second candidate, the difference between the votes, it was lesser than the number of NOTA votes polled. So you can understand NOTA has played a significant role in determining the outcomes in these 19 Lok Sabha seats. So this brings our attention to the uh, topic of none of the above votes in the general election. Now, why are we discussing this topic? Because as you can see, GS paper 2 syllabus, it highlights how Representation of People Act is there to regulate conduct of elections in the country. Further, subject of electoral reforms has been a key area of interest for UPSC. Case in point, this PYQ of the year 2017, where you can see question appeared on what are the attempts made by Election Commission of India for electoral reforms in the country. Now NOTA, that is the none of the above option, it signifies that a voter is expressing its anger or discontent towards a particular set of candidates which the voter is eligible to vote for. However, is this NOTA signifies the right to reject candidates? In its current dispensation, NOTA does not give a voter right to reject the candidate. However, it only has a symbolic or significance importance as it shows that the voter is currently angered or is discontent over the selection of candidates in his particular constituency. Now, this NOTA, it previously was available in case of when the vote were taken through ballot papers, as whenever the voters they were discontent with the selection of candidates, the voter then had the opportunity to give the ballot paper in a blank format. Now this gave voter the opportunity to express their discontent. However, with the introduction of EVMs, such options were not available with the voters. So on the recommendation of the Election Commission of India, Supreme Court of India in PUCL versus Union of India case, which the judgment of which was given in the year 2013, asked Election Commission of India to provide for NOTA option in the electronic voting machines. Hence, it brings our attention to the topic of none of the above votes in Indian democracy. Now, in this regard, let us discuss why giving NOTA option was needed in the first place. Now, as NOTA option is provided to voters of the country, it provides voters the opportunity to demonstrate their freedom of expression to voters. As voters then will have the opportunity to exercise their choice of voting, as then they can signify that they are unhappy with a particular set of candidates. So as this NOTA option, it increases the exercise of voting rights by the voters. Thereby, it also signifies that voters will have an option to not just abstain for electoral process. However, the voters will have the option to participate in the electoral process and demonstrate the dissatisfaction towards the candidates. So in a way, this NOTA option provides voters the choice to demonstrate their freedom of expression. Further, this NOTA option, it also promotes democratic values. How? Because if the NOTA option was not given to voters, then voters will not participate in the electoral process. However, by giving voters the opportunity to give NOTA votes, it also encourages the voters to increase their participation in country's democratic process. Hence, in a way, it promotes democratic values of exercising your constitutional right of giving votes. Further, it also, in a way, indirectly enhances inner party democracy in country's political party. Because by giving NOTA, the voter is indirectly signaling to the political party that their selection of candidate was not proper, thereby enabling the voters to vote for NOTA. Hence, the political parties, they'll be forced to give tickets to more morally sound candidates. Hence, promoting the reforms in country's democratic process. Further, it will also discourage electoral candidates from engaging in electoral malpractices such as corruption or political maneuvering, as otherwise these candidates they'll be feared that they'll not get votes from voters, as these voters will then pursue option of exercising nota option. Hence, in a way, it promotes that political parties will give tickets to morally sound candidates, and it also, in a way, nudges the political candidates from not participating in electoral malpractices. So, these were the benefits of what NOTA provides to the voters in general. However, this NOTA option is also somewhat a half baked option, because whenever the highest amount of vote is polled to NOTA, in this regard, the election is not cancelled. And in a way, the candidate who has received the highest amount of vote is declared as a winner of that seat. So in its current format, the NOTA, it does not give the voters the right to reject the candidate. Rather, it is only of symbolic importance. So in this regard, let us understand what are the challenges associated with the NOTA option. First of all, as I have already highlighted, that this NOTA option has proven to be ineffective in changing political outcomes in the country, as whenever the NOTA is polled the highest amount of vote, it does not force the election commission to cancel the election altogether. Rather, the candidate who has secured the second highest amount of vote is declared as a winner. Thereby, the impact of NOTA currently is just relegated to being symbolic in nature. Further, there is also a lack of constructive alternatives with Election Commission of India, because first of all, there is no follow-up mechanism, as voters will not be able to express for what reasons they have rejected the set of candidates, and it will also does not address the root cause of political corruption, that are inadequate candidate selection, them being involved in corrupt activities, or lack of viable choices with the voters. So in a way, this lacks constructive alternatives in general. Further, the NOTA, it also has a potential for misuse in case whenever the voters are less informed. As we have seen, the NOTA option, it is exercised more in rural areas as well as in constituencies which have reservation for SC or ST candidates. So whenever the voters are not particularly aware of what kind of candidates are there, this can create a potential for misuse. Further, this NOTA has also proven to be an instrument of strategic voting. As I've already highlighted the difference between first and second highest candidate, it has somewhat less than NOTA votes in as many as 19 out of 543 constituencies. So this creates a potential for voting around strategic calculation, thereby creating a potential for misuse of this provision. Additionally, it also undermines the electoral process in general, because increased NOTA votes, it highlights that the candidates or voters have become more and more resented as well as disillusioned with the country's democratic process. And this, in a long term, may impact the outlook of Indian voters towards Indian democratic system, as it will then force voters to participate less in country's electoral process. So these are the important challenges that are associated with the NOTA provision. So in this regard, let us understand what should be the way forward in order to make this provision more and more effective in nature. And the first suggestion in this regard is the need to conduct re-election whenever there is more than 50% of votes pulled for NOTA, or whenever NOTA gains the highest amount of votes in any constituency. So in this regard, the re-election provision should be introduced in Rule 64 of the Conduct of Election Rules, as this provision only requires a government notification and not an amendment by the Parliament. So, making re-elections essential whenever NOTA polls the highest amount of vote will make parties more apprehensive from giving tickets to morally reprehensive candidates. Further, whenever NOTA has been polled highest, then the candidates in that particular constituency should be barred from contesting elections in the next immediate re-election. Hence, it will cleanse the country's democratic system from not so adequate candidates in general. Further, there should also be an internal candidate revenue mechanism or review mechanism for political parties for a certain amount of threshold of NOTA votes polled. For example, whenever there is more than 30% of NOTA vote polled, then the political parties which have given tickets to candidates, they should have an internal review mechanism which will then enable them to assess for whatever reasons the candidates were rejected, and then will enable them to give tickets to more better candidates. Hence, these were the discussions that pertain to NOTA option. And with this, we move to second set of articles. Now let us move to the second set of articles. The first of which you can see appeared in the Hindu, the Indian Express, and the Business Line newspaper. Now, this news article highlights that RBI yesterday kept the policy rates that were repo rates unchanged. And why has RBI not reduced its policy rates? Because of the prevailing food inflation in the country. As you can see, RBI, it is statutorily mandated to keep the inflation level from 4 to 6% in general. And this inflation level are calculated based on the consumer price index. So technically, RBI is mandated to keep the inflation levels between 2 and 6% in general. However, in recent times, we have witnessed that country is witnessing high amount of food inflation in this country, which you can see it is higher than country's repo rate or policy rate in general. So because of this reason, primarily, RBI has not reduced its policy rate. Further, questions related to maintaining inflation levels in the country have been asked by UPSC before, especially in the prelims of 2022. So this topic becomes important from prelims perspective. So in this regard, let us understand the what, why and how of monetary policy meetings and how is country's monetary policy being discharged in its current form. Now, monetary policy, it involves changing of country's interest rate, and these interest rates are changed in order to increase or decrease the money supply in the economy. Now, which body in India is responsible for making monetary policy? According to the RBI Act of the year 1935, it is country's central bank, that is the Reserve Bank of India, which has been given the responsibility of enacting the monetary policy in economy. Now, broadly, there are two objectives of any monetary policy. First is to control inflation, and another one is exact opposite, is to promote economic growth. Now, any central bank, or for that matter RBI, it can control inflation by changing the levels of money supply in the economy. For example, whenever there is an increased inflation, RBI increases its policy rate, that is, it increases its repo rate, thereby making loans more and more expensive. And this reduces the money supply in the economy, thereby controlling the levels of inflation. On the other hand, to promote economic growth, RBI, it tries to increase the money supply in the economy by reducing the levels of repo rate. So these are the two broad objectives that any central bank takes in order to undertake what kind of monetary policy in that. However, what is the correct primary objective of RBI? It is to control inflation levels in the economy, and this is the primary objective of the RBI because as I've already highlighted, Section 45ZA of the RBI Act was amended, which forced the RBI and the government to bring an inflation target, which was the target of 4 plus and minus 2%. And this target highlighted that country's RBI, that is the central bank, it should keep the levels of inflation in the Indian economy between 2 and 6% of consumer price index. So this inflation targeting system of RBI, it highlights that primarily responsibility of the RBI is to control inflation, and the secondary objective then is to promote economic growth. So because of its primary objective of controlling inflation currently, hence RBI has not reduced its policy rates. Now how RBI tries to enact its monetary policy, and the responsibility of this is with the Monetary Policy Committee, which includes the governor of RBI, a deputy governor of RBI who is in charge of monetary policy, as well as another officer of RBI which is nominated by the governor of RBI. Further, this committee also includes 3 representatives who are nominated by the central government. Now, all these members have one value of 1 vote each, and whenever there's a tie in this meeting, the casting vote is then given to the RBI governor. So the Monetary Policy Committee, it meets frequently and then decides what kind of policy rate should be enacted, and this policy rate are given by the members respectively in a written format. As this written format, it enables the members to explain the rationale of giving a certain kind of policy. Further, how often does this Monetary Policy Committee meets? Now, statutorily, they are required to meet at least 4 times in any year. However, in practice, we have witnessed that this Monetary Policy Committee, it meets every 2 months. So based on this information, let us now solve the practice question. Now, with reference to Monetary Policy Committee, consider the following statements. The first statement, the Monetary Policy Committee determines the policy rate with a primary objective to achieve growth target. Now, as I have already highlighted that there are 2 objectives of Monetary Policy Committee, that is to control inflation and to promote economic growth. However, RBI, it is currently statutorily mandated to keep inflation within a certain gap or band. So this highlights that the primary responsibility of the RBI is to control the levels of inflation and not to promote economic growth. So this first statement here is incorrect, as the primary objective of RBI is to control inflation. Now moving on to the second statement. The MPC, it consists of 6 members, 3 of which are appointed by the central government. As I have already highlighted, out of 6 members, 3 are appointed by the central government, and these members, they are experts in monetary policy and inflation policy. So the second statement here is correct. Now the third statement, the MPC, it is required to meet at least once in every 2 months. Now this statement here also is incorrect. Why? Because as I have already highlighted that the statutorily mandated meeting of RBI, Monetary Policy Committee, should be at least 4 times in a year, and in practice, however, they meet every 2 months. So this is incorrect, as they are mandated to meet at least 4 times in a year and not once every 2 months. Understood? So based on this, how many of the above statement is or are correct? The correct answer to this practice question is option A, as only statement 2 was correct. So moving on to the second article, which you can see appeared in the Indian Express as well as the Business Line newspaper. Now these article highlights that India's Forex Reserves have come to an all-time high of $651.5 billion. Now this Forex Reserve, it is very much essential for maintaining healthy levels of Forex levels in an economy, thereby highlighting that it is important from GS paper 3 perspective. Further, a closely related question appeared in the prelims in the year 2013, which asked us to identify the composition of countries' foreign exchange reserve. So, in this regard, let us understand what are foreign exchange reserves. Now, foreign exchange reserves, they are kept with the RBI, and these are kept in various forms such as foreign currency assets, golds, and other important assets. Now, why these foreign exchange reserves are required? As these exchange reserves, they act as a cushion against any potential balance of payment crisis. For example, in 1991, India's imports, they became quite expensive. However, India was unable to pay for these imports because of its low levels of foreign exchange reserves. So, this mandated that any growing country like India should have high levels of foreign exchange reserve, as these will act as a cushion against any BOP crisis. Further, as per the RBI Act, it is the country's central bank which acts as a custodian of forex reserves, and the composition of these forex reserves, they include foreign currency assets which may be denominated in important foreign currencies such as dollar, euro, pound, yen, etc. Further, they also include significant amount of golds, special drawing rights at the IMF, as well as reserve transposition, which is required to maintain of every member who are the member of IMF. Now, in terms of weightage, as you can see from this table, which I took from the RBI's website, it highlights the most recent composition of countries' forex reserve. And you can see the foreign currency asset, they have the highest weightage, which can be followed by gold, then special drawing rights, as well as reserve transposition in the IMF. So, as much as 88% of countries' foreign exchange reserve, they are denominated in foreign currency assets like dollars, pound, euro, as well as yen. So, based on this information, let us now solve the practice question. Now, consider the following statements related to forex reserves in India. The first statement, Department of Economic Affairs under the Ministry of Finance is the custodian of India's foreign exchange reserve, which again is an incorrect statement because it is with the RBI. Now, gold forms the largest component of India's foreign exchange reserve, again is incorrect because foreign currency assets are the largest component and the gold is the second largest component. Further, inflow of foreign portfolio investments are likely to increase India's foreign exchange reserves. Now, whenever more and more investment are coming to India, it means that the RBI will then provide these investors with the required amount of local currency, that is Indian rupee. And then the rest amount of foreign currency which is made available is then deposited into the forex reserves, thereby increasing the forex reserves of the country. So whenever there is an increased inflow in India, be it foreign direct investment or foreign portfolio investment, it increases the level of forex reserves in general. So how many of the above statement is or are correct? As only third statement here is correct, hence option A is the right answer. Moving on to the next article, which highlights that the ASEAN is ASEAN, that is an associate of Southeast Asian countries. With this body, India is currently, it has a foreign trade agreement because India is a significant trade partner to this grouping. Now, Indian government, it wants to review the provisions of this FTA, hence it has sought input from industry players. So this was the context of this article. Now, important regional groupings which affect or involved India or affect India's interest, they are important from prelims perspective. Further, questions related to India's membership of various groupings have been asked by UPSC before in the prelims examination. So in this regard, ASEAN becomes important from the perspective of prelims examination. Now, this body, that is ASEAN, it is a regional alliance which aims to provide economic as well as security collaboration among its various members. Now, this involves 10 members which are highlighted here, which you can look afterwards. Now, this grouping, it came into existence in the year of 1967 in Bangkok, and this was done after the signing of ASEAN Declaration, which is alternatively also known as Bangkok Declaration. Now, the founding nations of ASEAN, they included Indonesia, Malaysia, Philippines, Singapore, and Thailand. And this body, it is headquartered in the capital city of Indonesia, that is Jakarta. Now, this ASEAN, it is quite significant for India because it is India's fourth largest trading partner, as India, it accounts for about 10% of India's total world trade. Further, India is also involved with this body in terms of promoting connectivity projects such as India Myanmar Thailand Trilateral Highway, as well as Kaladan multimodal transport, which will provide development of multimodal transport in Myanmar. In addition to this body, it also acts as a central focus point of India's Act East policy as well as policy of Indo-Pacific nation. Further, various institutions have been established to facilitate cooperation, such as Indo-ASEAN Culture Body. So this is important from prelims perspective, and with this information, let us now solve the practice question. Consider the following statements with reference to ASEAN nations. The first statement, Cambodia, Indonesia, Malaysia, Myanmar and Singapore are the founding members of ASEAN, which you can see is an incorrect statement because Cambodia and Myanmar, they are not founding members. Now, ASEAN, it came into existence after the signing of Bangkok Declaration, which I have already highlighted here, is a correct statement. Now, ASEAN is India's largest trading partner, which again is an incorrect statement because it is fourth largest trading partner, as the India's largest trading partner changes frequently from US or UAE. So, how many of the above statement given above is or are incorrect? Pay close attention, as this question asks us to identify incorrect statement. So, as statement 1 and 3 were incorrect, so option B is the right answer, as two statements were incorrect. So, with this, let us move to the last article, which you can see appeared in the Business Line newspaper, as this article highlights that rising power demand has fueled higher amount of natural gas trade in the Indian Gas Exchange, which is abbreviated as IGX. Now, as Indian government, it is looking to make India a more gas oriented economy. Hence, in this regard, IGX becomes important. Further, questions related to regulatory body in country's energy sector have been asked by UPSC before. For example, this question on PNG-RB. So, in this regard, let us understand why is there a first of all need for a gas exchange in general. Now, as I have already highlighted, Indian government, it is trying to make Indian economy more and more gas oriented economy. As Indian government, it wants to increase the share of natural gas in country's energy generation from currently 6.5% to 15% by the year 2030. Further, it also highlights that Indian government has a proper investment focus on the natural gas sector, and it is related to its entire supply chain, right from production, that is producing of natural gas in domestic sources, to transport, that is establishing gas pipelines, as well as distribution in countries corporate and household sector as well. Further, for that, India is looking to promote market-based mechanism for price discovery as well as trading of gas locally. Further, this policy framework will promote competition and innovation in countries' gas distribution and generation sector. So, in this regard, Indian Gas Exchange becomes important because this exchange, it is the first automated national gas exchange which is looking to promote and sustain an efficient and robust gas market in the country. As this exchange, it aims to promote interaction of multiple buyers and sellers who will then be involved in both spot and forward trading as well. Further, this gas exchange, it enables efficient and competitive discovery of gas prices, thereby making it more and more market oriented rather than being government controlled in general. Further, this gas exchange, it operates under the regulatory framework of the Petroleum and Natural Gas Energy Regulatory Board, also abbreviated as PNGRB. So with this information, let us now solve the practice question. With reference to Indian gas exchange and its need, consider the following statements. The first statement, Indian government, it aims to increase the share of natural gas in the country's energy mix to 25% by the year 2030. Now this statement here is incorrect because as I've highlighted, Indian government, it wants to increase the penetration of natural gas in country's energy mix to 15% and not 25% by the year 2030. Moving to second statement, IGX is India's first automated national gas level exchange, which is correct. Now third statement, the exchange, it operates under the regulatory framework of Securities and Exchange Board of India, which is the regulator of country's equity market. Now this again is incorrect. As I've highlighted here, the IGX, it operates under the framework of PNGRB and not SEBI. So third statement also is incorrect. So as only second statement here is correct, hence option A is the right answer to this practice question. So with this, I take your permission to conclude our today's session of Daily News Simplified, and we'll see you again tomorrow at 6 p.m. sharp. So please make sure until then to study as prelims are approaching, and it is expected to be held on 16th of June. So with this, we conclude our today's session of Daily News Simplified.